Well, hello, everybody. My name is Lee Schwartz, and I'd like to welcome you to our webinar for dental practices. Today's topic is provider relief funding reporting requirements. I noticed a lot of familiar names on the attendee list. I know a lot of you have attended our past webinars, and we're excited to continue bringing you this important information. So we will jump in here in just a sec, but a couple of quick housekeeping items. If you have a question during the webinar, just open up the chat box in Zoom and submit your question to all panelists. We are going to try to leave a few minutes at the end for some Q&A. Also, we're recording this webinar today. You will receive an email with a link to a survey, as well as our SVA resource page where the webinar recording will be available. Now, many of you are already clients of SVA, and we'd encourage you to reach out to your SVA contact if you have questions coming out of this. I'd also encourage you to share our contact details with other practice owners who could use our help. Over the last year and a half, we've found that there are a ton of practices that aren't getting timely or knowledgeable advice from their CPAs or their advisors, and obviously we're happy to help. As an example, we've met more than a few practices that just weren't at all aware of this HHS funding that you're here to learn about today, and they've totally missed out on it. So there are some pretty significant benefits to working with someone like us. So please share our contact details with your friends or peers. Now, if you're not a client, please reach out to me and I'll get you connected to a subject matter expert at SVA who can get your questions answered. I also want to say a very quick shout out for our recently completed dental salary and benefits survey. If you participated and shared your data, which about 100 practices around the state of Wisconsin did, you should have already received a copy of the results. If you didn't and would like to learn more, please get in touch with me. A lot of practices are using this data to remain competitive in what is obviously a very difficult hiring and retention climate. Okay, so let me introduce our subject matter experts today. Laura Zock is a CPA and principal and leads SVA's healthcare practice group out of our Madison office. And Jen Radke is a manager in our healthcare practice out of our Brookfield office. Both Laura and Jen help lead the team that works with dentists around Wisconsin and really all around the Midwest to help them minimize taxes and maximize profitability. But before I kick it off to them, let me just start things real quick with a poll question so we can get the pulse of our attendees today. So question number one, have you been in the portal? Your options are, yep, we're all set up. Yes, it's very confusing. And what the heck is the portal? We'll give you a second to answer there. Okay, so there you have it. Pretty evenly distributed between we're all set up and we're confused. And then some of you really starting from scratch. So Laura, you know where you're going, you know who your crowd is. I will kick it off to you from here.
Great, thank you, Lee. Thanks for warming us up. And I'm glad that too many of you didn't answer to what the heck is the portal anyway. Well, first of all, why are we all here today? I think we really have COVID to thank for that. COVID's bringing us together today to talk about provider relief funds. I'm guessing you signed up for this webinar because your practice received some provider relief funds and you're thinking ahead to the reporting period that's coming up pretty quick for folks that received phase 2 payments. So today we're going to think back for a little bit, back to summer of 2020. That's when COVID and all of its craziness was still pretty fresh yet. And you'll remember there was a flurry around when HHS rolled out phase 2 and said, hey, dentists are now eligible for phase 2 provider relief payments. And I know we helped a ton of our clients in the dental industry work on their applications so that they could get some provider relief funds to help with the increased expenses and losses of revenue that you all saw from having to shut down or change the way you practice because of the coronavirus. So many of you probably received these funds at the tail end of 2020. And if you received them by December 31st, then what's next for you is you have this reporting coming up. The reporting portal is opening on January 1st, New Year's Day. and it's due, all the reports for money received through this phase are due on March 31st. So we felt like this timing was great to sit down with you all and have some time today to talk about what does the reporting process look like. So we're going to go through this with hopes that you can use this to help get your ducks in a row and start thinking about that reporting period that's coming up and ready to go. At a really high level, where we're at right now is you've received some PRF funds, provider relief funds. Those are meant to be used for healthcare related expenses to prevent, prepare for, and respond to coronavirus, or to help cover the lost revenues that your practice saw because of COVID-19. Through this reporting process, you're going to be reporting the expenses, you're going to be reporting on lost revenues, and ultimately determine if you need to pay back any of these provider relief funds, or if you indeed can keep them because you use them for the purposes that through the terms and conditions are allowed. Now let's talk about some of the key terms to know that are important for us to keep in mind as we're getting going on this reporting. So the first thing is you need to know your payment received period. And this is the period in which you received a provider relief fund payment. If you've received multiple payments, it's important to know the dates of each of those payments, because ultimately this payment received period is going to drive all of your deadlines and all of the periods for which you need to gather information to report on. The received date is the date in which these provider relief funds were automatically deposited into your bank account, which happened for most folks. If you happen to be one that received a physical check, the date that you deposit it in the bank is your payment received period. The next term we have highlighted here is period of availability. This is the time frame in which those eligible expenses or lost revenues need to be reported on or used during this period in order to determine whether or not you keep all of the provider relief fund payment. And last but not least, the third key term here is the reporting time period. And this is the time frame in which the reporting must be submitted in the portal. Now let's take a look at the various time periods and how this all fits together. So you can see here on the far left, there's 4 different reporting periods that are applicable to provider relief funds. In the second column here, we're showing you how that payment received period works. And the period that's most likely applicable to you and your practice is period 2, which we have the red arrows pointing at here. If you received your payment between July 1st, 2020 and December 31st of 2020, that then means that your period of availability for which you could use the funds for coronavirus purposes or to help offset lost revenue due to coronavirus, that tracking period is January 1st of 2020 through all of 2021. So ending coming up here at the end of December here. Once that period of availability ends, the reporting portal opens and you then have 90 days to do all of your reporting. There's also a $10,000 aggregate consideration here for when you've received multiple payments. And if you've received payments under $10,000, likely you don't need to report on them. But we're going to move ahead here and take a look at an example on how this $10,000 threshold applies when you've received multiple payments. Because really, as we've covered, the timing and amounts of these payments will dictate what type of reporting you do and when the reporting is required. So here in example 1, we've got a practice that received 2 payments. The first one was late in April of 2020, and this payment was $3,200 or under $10,000. This practice also received a second payment a little bit after that in June for almost $55,000. So here the payment, this practice has exceeded that $10,000 aggregate of payments. And because of the timing in which they received the payments, the fact that they happened before June 30th, the practice needs to report for period 1 for the entire $58,000. Now looking at example 2, very similar fact pattern, but what's changed here is that that second payment was reported or was received in July of 2020. So what these facts for this practice means is that first payment received of $3,200, that's under $10,000 and hence doesn't need to be reported because the $55,000 came in the next reporting period. So this practice will need to report for period 2 on $55,000. Now there's some situations here that might work out depending on when you receive the payments and how much you receive, that you actually have to go through the reporting process twice. Now let's go ahead and cover what if you don't report and you don't miss the deadline, or you do miss the deadline. Actually, I think I'm a slide ahead. Sorry about that. With these period of availability, what that really refers to is the time frame in which you need to track your expenses, track your declines in revenue, and then report on that back to the portal. When you're looking at the funds from payments that you receive for this period 2, you need to use those funds or report on lost revenues to use up those provider relief funds in their entirety through December 31st of 2021. And now let's move ahead to what happens if you don't do the reporting. For period 2, you need to have the reporting done by March 31st of 2022. And my key advice here is don't procrastinate, get started on it early, because if you don't submit by the deadline, it's very possible that you might have to pay the entire provider relief funds back and you might be excluded from future payments. So here's that information that will hopefully help motivate you to make sure you get going on this and are thinking ahead, making sure you'll have your information together in a timely manner to get the reporting done. And we here at SVA are ready to help you. We've got experts. Everyone on our healthcare team knows how to help with these and will be helpful resources for our clients and others throughout this process. Moving on ahead, what happens if you don't use up all of your provider relief fund payments on qualified expenses related to COVID-19 or because of declines in revenue? Well, any unused funds that you might have will be determined through the reporting process. And then 30 days after that reporting time period ends, you will owe the money back to the government. So when you end up finishing your reporting process, if you happen to have any unused funds, the next step will be initiating payment to pay those funds back, and you have 30 days to do so. What we've been seeing with our dental practices is that the decreases in revenue that they experienced because of COVID were pretty large, and we're not expecting many practices to have unused provider relief fund payments to the point where they would need to pay them back. All right, I think we've got another poll question lined up next. We're going to take a moment here to ask you, did you apply for phase 4 funding? If you think back, phase 2 was the first phase available for dentists, and then the government did release some additional funds available for phase 4 funding recently. That application process occurred during the month of October, roughly, and really was based on if you still had increased expenses due to dealing with the coronavirus. So hopefully you've all had a moment to pick your answers here, and we can see what the audience has. All right, about 40% of practices applied for phase 4 and about 60% of practices didn't. I'm curious to see, I haven't heard of many practices getting phase 4 funds yet if they applied for them. So if you already have yours, it might be helpful for you to message us and let us know. All right, well, I'm going to turn it over to Jen Radke, who's going to cover some information for us on what you actually need to do to start the reporting.
Well, thank you, Laura. So from the first polling question, we saw that a significant number of you have already gone into the portal, which is great news. Congratulations on completing the first step. If you have not, the first step is going to be to create a login in the portal. So we have the web address up there, prfreporting.hrsa.gov. So you want to register as a new login, a new TIN. And they will ask you some questions that I will help you be prepared for. Before you click on the register button, notice the resources at the bottom left of the screen. There are several resources there to help you as you navigate through this process. There's frequently asked questions, which they have been updating and are very useful. There's also user guides for both logging into the portal and for completing the reporting process. And then lastly, there is a portal worksheet that has a number of tabs that mirrors the reporting requirements. So it's cell for cell. So if you complete that workbook prior to logging in to do your reporting, you will be cell for cell. It will be much easier for you. So let's take a look at the next step in the process is to register your business. So registration must be done in one session. It'll take about 20 minutes. If you have all of the information gathered ahead of time, it'll likely take you about half that time. Note that the website is compatible with the most current versions of Edge, Chrome, and Firefox. So don't try to go in Internet Explorer because you're gonna have some issues. So what you'll need to gather before you start the process is the federal tax ID of the reporting entity, the legal entity name as it's registered with the IRS, the legal entity address also as it's registered with the IRS. It's very important that you use the IRS registered name and address so that the system can easily link your business up. The contact person responsible for submitting the report, name, email, phone, and title. There is only one contact person allowed for each reporting entity. So make sure when that person signs up and puts their email and their phone, if anybody else is going to be going in under that entity, they'll have to use that person's login information. And every single time you log in, you will have to do a two-step verification. So you'll have to get a text message with the code or an email with the code. So note that it's very important. And then also have your PRF payment information, the amount, the date received, and whether you received a physical check or an ACH. So gathering the reporting information before you begin is really key to making sure that your reporting goes smoothly. Download and utilize the portal worksheets from the login page under the resources, that bottom left corner of the login page. You'll need the amount of interest earned on PRF payments. So if you put your payments into an interest-bearing account for if you haven't utilized them yet, then you will need to report any interest earned on those payments. If you have payments, if you put the PRF payment in with other funds that are also interest-bearing, you will need to do the calculation to come up with the interest earned specifically on the PRF payments. And you'll do that as your latest fiscal year end. So that would be 12/31/21 for this reporting period. You'll need other assistance received during the period of availability. So any grants, PPP payments. I know there have been some dental grants that have been distributed during this period that you will need to report. And that period of availability again is from January 1st, 2020 through December 31st, 2021. You'll need to know your COVID-related expenses. You'll need to have them separated by quarter for all of 2020 and all of 2021. You'll need your actual patient care revenue for calendar years 2019 and 2020. You'll need the annual amounts. And then if the amount of the PRF payment exceeds the COVID-related expenses that your business has incurred, you will need to complete the lost revenue section, which we will talk about in depth later on. And then lastly, you will need some metrics information for your business. Personnel, the number of employees, they want it separated by clinical versus non-clinical. They want it separated by full-time, part-time, contracted, furloughed, separated, and newly hired by quarter for all of the reporting years. And then you will need the number of outpatient visits by quarter. There are some other metrics in there. There are, inpatient visits and the number of beds, staffed beds, things like that. For most of our clients, especially dental, those will all be zeros. So let's look at more information. So reporting unreimbursed COVID-related expenses. You're going to only include expenses that have not been reimbursed by other sources. So if you received a grant, a $5,000 grant for, PPE from another entity or another government agency, those expenses are not allowable under this reporting. And you will only include expenses incurred to prevent, prepare for, and respond to COVID. Common examples include extra PPE purchased above and beyond normal quantities during COVID. And these are really incremental costs over and above what you normally incur. So if you normally purchase PPE, you will want to use the incremental costs due to COVID. Cost of partitions installed to protect employees and patients. We've seen a lot of those that have gone up over the last couple of years. Cost of air purifiers, hand sanitizer stations, anything that your business has purchased to respond to COVID to make it safe for your patients to come into your office and your employees. Rent or build out costs for additional space due to COVID. So in order to comply with the social distancing guidelines, if you leased an extra suite, if you poured a concrete slab so you can put up a tent, to take drive-through patients, whatever that extra cost looked like, you can include those expenses. You cannot include your regular rent, but anything incremental. And then cost for additional signage related to COVID. So I've seen a lot of, clinics and dental offices will turn chairs around and put the signs on, not in use, to separate people in lobbies and waiting rooms. Those expenses would be allowable here. And then for the lost revenues calculation, the PRF payments can be used as reimbursement for lost revenues. So if your expenses related to COVID did not exceed the amount of payment that you have received, then you can use lost revenues as reimbursement. So what you'll need to gather is all of your receipts, net of refunds, by quarter, by payer for calendar years 2019, 2020, and 2021. So the payer buckets that are included in the reporting in the portal: Medicare A and B, Medicare C, Medicaid, commercial, self-pay, and other. So I know for dentists, there's probably not a lot of Medicare, maybe some Medicaid, a lot of commercial, self-pay, and other. So focus on those big buckets. And then it's easiest to get the information from the billing system and then tie it back to the financials. And we can help you if you have discrepancies between your billing system and your financials. And then only include patient receipts and revenues. Do not include other revenues such as stipends, on-call revenues, medical directorships, interest, investment incomes. Do not include the PPP payment. If you receive PPP payments, you'll only want to include patient receipts, net of refunds.
All right, next we're going to take a quick look at a little deeper into that lost revenues and how does it really work? Well, the one really neat thing that I think is helpful for dental practices to keep in mind as they're working on pulling this information together for this calculation and then thinking, do I have enough lost revenue and expenses to cover my totality of PRF funds, is that the revenue loss calculation is done on a quarter by quarter basis. So you look at Q1 2021 or 2020, for example, compared to 2019. And if there's a loss in that quarter, it counts as a loss. If you think about it, when you opened your clinic doors again, you had a lot of pent up demand for patients to come in, have their work done, and you probably had a really awesome quarter, that first quarter that you got back to service, and you might have seen more revenue in that quarter than that third quarter in 2019. That doesn't count towards the lost revenue calculation at all. It's only a quarter to quarter difference in the decreases. And if you had a positive, doesn't factor in at all. So we're going to move ahead now to the next slide to look at what this information will look like when you are starting to pull it together and fill out the worksheet, that helpful HSRA worksheet, and get it ready to go for input into the portal. And you're going to need to total up your quarterly receipts for 2019, 2020, and then through the first half of the year for 2021. And you'll be putting this quarterly information right in the portal. And then the next screen here shows us that the portal itself does the calculations on whether or not you have revenue losses, and will only count those quarters where there is a revenue loss. If you have a quarter where there was a revenue increase, it's going to count that as zero or no contribution at all towards the calculation. So I think that's really key to keep in mind. I would recommend to you that one of the first things you do as you're pulling your information together for the reporting is to do this lost revenue calculation yourself on a quarter by quarter basis and see, do I have enough of a receipt loss? Just confirm for yourself and give yourself that confidence that you do or do not have enough of a receipt loss in order to keep all of your provider relief funds. I think that's one of the best things you can do early on, because then too, if you know that you don't have enough of a receipt loss to cover your whole provider relief funds, to me, that means you need to dig a little deeper through your general ledger system and think through and find some more costs that are related to coronavirus that you can then use up the remaining amount of your provider relief funds on. Jen, can you now bring this all together and show us a summary on wrapping it up?
Absolutely. So the system will, once you have entered everything into the portal, the system will give you a summary of everything that you've entered into the portal. And it will tally all your COVID-related expenses that you've entered and your eligible lost revenues total. If your expenses and lost revenues cover the amount of the payment that you've received, you're done. If your expenses and lost revenues do not cover the amount of the payment you received, the unused funds should be returned to the HRSA within 30 days after the end of the reporting period. And there will be an option for you to do that electronically. And then lastly, we just wanted to show you the metrics that will be required in the reporting calculation. These are not factored into the eligible expenses and the lost revenues. These are just metrics for reporting that HRSA is using to track to see what happened with your business. So you'll enter your personnel metrics, you'll enter your patient metrics, and then the facility metrics at the bottom, you will enter all zeros. And you will have to enter all zeros for anything that's not applicable. The system will not let you move on to the next step until every cell is filled in with a value or zero. And then you're at the finish line. So at the finish line, there will be a few survey questions that you must answer before you can submit. They are required. Be honest. They'll basically just ask you if the funds helped you, helped your profitability during COVID, helped you keep staff, and however else the funds helped you. Once you finish the survey questions, you can just review everything, make sure everything looks good, and then hit submit. You'll receive an automatic email confirmation that your reporting has been submitted. You won't receive anything else after that unless there is an issue. So no news is good news in this case. And then you'll want to retain all the supporting documentation, the receipts, the calculations for the lost revenues for 3 years, as that is the time period that the HRSA can choose to audit you. And then for the audit requirements, this is only applicable if you've received a PRF payment or any federal grants combined with the PRF payment of over $750,000. If you meet those thresholds, then you will be subject to a single audit in the future. If this applies, you can reach out to us and we will help you navigate through that. And then we have our last polling question. Based on what you've learned today, are you comfortable going through the reporting process on your own? Yes or no? And again, the portal worksheets that you can download from the login page and all of the user guides and the frequently asked questions can help you, but we are here for you. We have done this many times, but this is the second reporting period that we'll be going through. So we are well versed in what needs to be reported and the most efficient way to do it. So please reach out to us if you have any questions or if you need any help with your reporting. Awesome, great news.
That was
Well,
our
how about
goal,
that?
to help
That
people
means-
prepare for it.
Yeah, Laura and Jen, you two must have done an amazing job, because we even had some people who were like, what is the portal? So now we've moved people through. I know we're already a minute over, but I want to be respectful of people's time, but we have had a couple questions come in and I want to make sure that we get those addressed as well. I guess the first thing that I would ask is, and Laura, maybe this is for you more, I know we've both done this for clients and also helped guide clients through the process. Like, can you just give some sort of guidance on like, how can you be most efficient in doing this? Because there's a lot here.
Oh, there really is. And sometimes it can be overwhelming to think through, but I think, hopefully our 30 minutes together has given people at least an idea of what the process is like. I would say, key points are gather your information early and start on it early, and leave yourself plenty of time to, run into a hiccup or two, or be able to, reach that point where you feel like you need to bounce some questions off of us or have us help you out with the reporting. Start with that lost revenue calculation too, just to see, do you need to dig deeper into COVID related expenses so that you can maximize keeping those provider relief funds. As Jen has mentioned a couple of times, the worksheets and the user guide that are available on the main web page are very, very, very helpful. That user guide's about 70-ish pages long, so it's a little overwhelming to start to look through, but it has a lot of hints in there, such as like save often. There's places where you can't leave the forms blank, you need to put in zeros. And I think it's also important to note that you can't choose to start at step 17 in the process and then bounce back to step 3 and then go ahead to bounce to step 8. You have to do it in the order that it comes from, because certain answers to questions will guide you to what step you have to do next. So and last but not least, please reach out to us when you have questions so we can help. We're here for you.
Great, thank you. Okay, a more specific question that came through. If you have low additional expenses such as PPE, signage, and partitions, but large revenue losses in 2 quarters, is it possible to just skip that portion and enter zeros?
So I would say if you have COVID expenses that are significant and easily identifiable, do report the expenses if you can. Even if you have enough lost revenues to cover the payments, there may be future payments that you'll be eligible for that you will be able to utilize those losses. So you'll want to go into it, with as much information as you can and report those expenses if you can.
Okay, thank you. Good. Well, this is great. I know we went long, but there's a lot of information here, and we want to make sure that everybody on here gets the information you need. So I just want to remind everybody, SVA has created a resource page, which is svaccountants.com/dental, where the recording of this webinar will be located, as well as e-guides and past webinars and other resources specific to dentists, including that dental salary and benefit survey that I talked about earlier. So this was the last webinar in our dental series, but next week, Thursday, we're doing our year-end tax planning webinar with a specific emphasis on recent legislation and what you need to know. We will likely restart our dental webinars come late spring, early summer of next year. Just want to remind you all that the SVA team is only a phone call or an email away. So if you're a client, reach out to your SVA contact as questions arise. And if you're not currently an SVA client, you can contact me, Lee Schwartz, and I can get you the help or the answers that you need. Thanks again for joining us today. Have a great rest of your day, and we hope to see you at our next webinar on December 16th. Have a great afternoon.
Thank you.
Thanks, everyone. Happy holidays.
Happy holidays.